Current situation with renters is favorable as we are seeing solid rent growth month over month from May to June, as well as year over year. Apartment List published a report that estimates rent grew 2.3% from May to June and is up over 9% from 2020.
Welcome to Buzz House, a Baker Tilly podcast where you can find all the buzz around multifamily housing. I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrett Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Each week, we'll bring you a guest or a topic in the multifamily housing industry that will help you win now and anticipate tomorrow. Let's get started. Our guest today in the Buzz House is Brent Mayer, a colleague of ours at Baker Tilly, is the managing director in Baker Tilly's Transaction Advisory Group. This is Brent's second time on the Buzz House. Welcome back, Brent. Glad to have you. And we'll be talking to him today and what he and his team have observed for quarter two here in 2021 in the multifamily housing industry. He can talk a little bit about the quarterly report around the real estate markets that he and his team put together. Before we dive into that discussion with Brent, we want to give you a few legislative and industry updates as typical. The National Income Housing Coalition, NLIHC, released its annual Out of Reach report. It's a report that Garrick and I and our team often look at, use for advocacy and so forth. The report estimates the housing wage a full-time worker must earn to pay no more than 30% of their income on fair market rent. And it goes state by state and county and metro area. As a whole, this year's national housing wage for a modest two-bedroom home would be $24.90 an hour to afford a two-bedroom and $20.40 per hour to rent a modest one-bedroom. The report also finds that a minimum wage worker would have to work a 97-hour work week, again, to afford a modest one-bedroom apartment. We actually will be having a researcher from the National Income Housing Coalition on our podcast soon to give a deeper dive into this report. So please stay tuned for one of our next podcasts. Just a couple notable items. Garrick and I have talked a lot about state and local housing tax credits, which is this great trend we're seeing in many, many states. A couple quick updates there. As mentioned in our last podcast, Arizona's governor signing legislation that creates $4 million per year of state and local housing tax credits. Properties placed in service on or after June 30th, 2022 are eligible for this credit, and the credit sunsets in December 31st, 2025. We're going to be talking a lot more about that at Arizona's conference later in August. The Hawaii governor signed legislation extending the state's local housing tax credit through December 31st, 2027. So again, another extension of a successful state credit. In Pennsylvania, $10 million annually in state credits is currently in the state's budget. This was passed and just needed to be found a funding tool, and looks like that's going to be moving forward. Finally, legislation in Kentucky has been introduced to create a state local housing tax credit. So we're working on putting together a summary of these credits that we'll be able to get out to our listeners, both what's in law today and also what is being proposed. So just a lot of really exciting news on the state credits. With that background information, Garrick and I are now going to jump into our discussion with our colleague, Brent. Garrick?
Thanks, Don, for that intro. And Brent, for those listeners who may not have been introduced to you from the last visit to Buzz House, why don't you go ahead and just start out and telling our listeners a little bit about yourself and your background and what you're working on in Baker Tilly Transaction Advisory Group.
Sure. Thanks, Garrick. And Don, thanks for having me back on the Buzz House. It was a pleasure to be here. My background is rooted in transactions, having worked for a middle market investment bank for almost 15 years prior to joining the firm. I lead our real estate valuation and advisory group, which is focused on assisting owners, users, and investors realize their goals by providing market intelligence, underwriting, diligence, and analytics as part of our real estate advisory practice. We provide financial advisory services that range from single asset appraisals and valuations to large portfolio or entity level valuations to assist our clients make those decisions that will help them achieve their goals.
Well, thanks for that intro, Brent. So let's go ahead and dive into some questions on the multifamily industry. So it looked like multifamily investments from your last update fared pretty well, right, and compared to other asset classes. But now that we're past Q2 2021, what is the outlook for investors, operators, and owners? Are they still maintaining some level of optimism, with respect to the eviction moratoriums, COVID restrictions, et cetera?
So I would say overall, yes, the multifamily space is an exciting sector with lots of reasons to be optimistic across many geographic regions. The easing of restrictions coupled with the strong economic growth is a boost for the sector. Current situation with renters is favorable as we are seeing solid rent growth month over month from May to June, as well as year over year. Apartment List published a report that estimates rent grew 2.3% from May to June and is up over 9% from 2020. Anecdotally, we are also seeing this strong rent growth in our analyses and underwriting, particularly in certain pockets of the country. And if you think Sun Belt and Tier 2 or 3 population centers, expectations for rent growth remain strong, and we expect that to be true for the remainder of the year. On rent collections, the National Multifamily Housing Council reports around 95% rent collected for June. Demand drivers are also strong with the strong housing market. The St. Louis Fed reports the U.S. median sales price for Q2 of this year was almost $375,000. That's a 16% increase from the same quarter in 2019, which equates to about an 8% annual run rate. So it's a very healthy increase. This is delaying renters from becoming homeowners, therefore increasing the rental population. Further complicating the demand is the aging millennial cohort who are now aging into their 30s, looking to start their families. Marcus and Millichap released a housing brief last week that estimates that the U.S. household formation will increase at its fastest annual pace in more than a decade and will remain historically high in the coming years. They also report that in that same brief, the average price per multifamily unit increased over 5% this past year.
Well, Brent, thanks for that summary. We've had, multiple podcasts related to other aspects that have affected multifamily in the construction cost and the increase in pricing on those materials. And it looks like it's starting to come down. So I just kind of wanted to continue with that topic for this update and maybe dive into a quick supply construction discussion with you and what your team saw through Q2 2021 with respect to those construction costs that were so high in the first quarter.
Sure. So as part of the underwriting, one of the early hurdles you evaluate in any potential acquisition is how does your value compare to replacement costs? And as replacement costs exceed value, right, is going to push you towards acquiring an existing building if that's an option. So I think that's part of the driver for seeing such a favorable transaction market and why that sector will remain strong for the near term. CoStar reports development is way down from prior years and periods through the first 6-7 months of the year. Typically, we have about 200,000 units in construction. And as of right now, we have 140,000 units under construction. So it is down significantly.
Interesting. So, and then what about other aspects of it? Because now we're deep into 2021 in this pandemic, and I wanted to discuss if you've noticed any trends in multifamily industry due to COVID as it relates to tenants and also apartment building designs. Do you see anything kind of changing, or is it still following the trajectory of what was happening in the first quarter?
Well, I think it's a continuation from the first quarter, although with the easing restrictions, I think we've seen less of an impact in terms of the work from home, although that's still very much impacting the tenants. Our expectation is we'll see a shift as kids and students return to school here at the end of the month and into September. We may see a shift there in what tenants are deciding to do. But now that they are no longer required to go to the urban center to visit their office, some firms are requiring their workers to come back, but not everyone. So I think there is creating a little bit of a shift. I also think we saw a shift from the urban center to the suburbs, and similarly from urban suburban to those tier 2 and 3 cities I referenced earlier, creating a strong demand.
That's actually a pretty good segue, and thanks for those insights there, because you mentioned shifts of multifamilies to different markets, either urban or suburban. And so given the cost of debt is extremely affordable still. I figured there would be a lot of activity in the market for acquisitions. Can you maybe touch on or discuss some of the Q2 activity and where you're seeing most of that activity situated, like whether it's in major metro markets or predominantly in the submarkets?
I would say it's been across of all of it. Saw some very large announcements. Blackstone announced that they're acquiring the affordable housing unit of AIG in an over $5 billion transaction. And so I expect that, I don't know the details of that portfolio, but I expect to touch many states across the country. Our experience has been in Q2 across from Florida, across the Sun Belt, mostly tier 2 type cities, but I think it's been across all the sectors and markets. I do think there will be buyers for the urban space because there will be a return to those buildings. And it's just a matter of, is that a year away or 3 years away?
And with that, we want to thank Brent very much for joining the Buzz House here for a second time. Listeners reach out. I think, Brent, would you just mind telling our listeners just one more time quickly about kind of our quarterly report that you and your team put out?
Yeah, sure. So we usually cover the 4 main food groups and look at activity in terms of transaction and just trends in each of those. So retail, multifamily, office, industrial, and then we usually try to rotate in another topic each quarter. So lodging, hospitality, senior housing, we'll rotate those throughout the year. And we just published ours this week.
Very good. I think we'll make sure to link that at our podcast website as well. And again, listeners, thank you for tuning in today. Bye. Thank you for listening to Buzz House. To receive a notification when new episodes are available, please subscribe to Buzz House, a Baker Tilly podcast, wherever you get your podcasts. For additional resources around multifamily housing, check out bakertilly.com. And if you have a suggested topic, please send them to build@bakertilly.com. That's BUILD@bakertilly.com.